So for today's meeting, there's sort of three main points that I'd like to go over. There's been a lot of changes in the sales tax landscape over the last few years. I think that anybody on the line has probably received communication from Avalara ourselves. You've probably received communication from RKL. You maybe have talked to tax advisors. I'm sure that not all of this is going to be a newsflash to everyone, but I certainly just want to kind of address, not only the changes that are occurring, but what I sort of see customers that I'm working with day to day facing as challenges because of those changes. I think that a lot of it may be relatable to other companies who are using Sage. And so at the end of this, we can sort of talk about the path to compliance, or basically the steps that you can take if any of this is something that you feel like you guys are dealing with as I go through the challenges. But I can go through the steps that you guys can take to get sort of back on track. And we work with customers every single day on all of this. So again, please ask any questions, and just know that if any of this is shocking, just know you're not alone. I have conversations about this all day, every day, and you would be surprised at how many people, just aren't aware of all of the things I'm about to go over. So with that, I just sort of want to start with just talking about, some of the changes that have occurred in sales tax over the last few years. So complexity has definitely grown. There have been big changes, such as the South Dakota versus Wayfair ruling that happened in June of 2018. It was very highly publicized. I'm sure anyone who deals with sales tax much has, been aware of that ruling and kind of what it means. But another thing that I kind of want to talk about today is physical nexus changes. That's where I see a lot of customers sort of get tripped up in this compliance conversation. So I'm definitely going to be addressing some of the changes that have happened around economic nexus, but also physical nexus. The other thing that, is really a struggle for a lot of customers I work with is just keeping up with the ongoing rule changes. Things like dealing with rate changes, product taxability, what you're actually selling in different locations may be taxed differently. Keeping up with exemption document rules. Florida over the last year, I guess it was last year, put into effect that resale documents have to be renewed annually. So there's all sorts of changing rules that are happening that are making this more and more difficult to keep up with. And then along with both of those points, all of these changes are making the cost of compliance and the cost along with that go up exponentially. So, really the goal of this conversation is sort of to get you guys all on a path to compliance without having the cost be so large. I have a lot of customers that are going through different services with us to help them figure out where they might have Nexus, and we're going to talk about that today. But ultimately, just understand that the goal of a lot of what we're going to talk about is to save you money in the long run, because we are aware of how costly fully getting into compliance can be for some companies. So, another thing that's not a very popular thing to maybe recognize is that compliance really is not optional. We are in a time right now where there have been a lot of new laws passed. So there is certainly not a lack of audits going on, especially with what I'm seeing among a lot of the customers I work with. So unfortunately, with compliance, the burden of proof is on you. And what that means for Sage customers specifically, a lot of you are probably dealing with a lot of exemption documents. So it's really important that you have proof for why you're not charging sales tax. For other companies, that may mean you have to be able to prove that you do or don't have Nexus in certain states. So there's a lot of this that is lying on you. And so, a lot of what Avalara is offering and what we work with RKL and offering our customers is to help kind of alleviate some of this burden. Audits are getting so much worse right now. Obviously, since the Wayfair ruling, it's much easier for an auditor to go in and target a company because there are so many other ways now that you can create obligation, which we're certainly going to talk more about. But another big thing to realize is that, with the climate that we're in with COVID, I think that we're going to see coming out of this, obviously the states are losing a lot of revenue right now. I think the audits are only going to get worse. So you just want to make sure that when and if that happens, that you're prepared for that. And then back taxes, penalties, interest. This is a big, big piece of today's conversation. We want to talk about how you can ultimately get into compliance without having to deal with all of the back taxes, penalties, and interest. And there are steps that you guys can take to make sure that that doesn't happen. So with all of this being said, let's sort of talk about some just Nexus background, and then we'll kind of, bring it all around full circle. So a big question for a lot of customers is just why is this happening? Why are all these laws changing? Why is sales tax becoming so complex right now? A big thing to understand is that about a half of a state's revenue comes from sales tax. And I think that that's really the basis to answer most of the questions around the why of this, because we live in a day and age where we are all shopping online. If you're like me, you've been burning Amazon up over the last few weeks. And so for a company that may have only had a physical presence in maybe one state and is shipping across the country, which is so possible these days through, Amazon and eBay and Walmart, all of the places that you can go and sell your product. A company that is maybe only located in one place historically would have only had to charge sales tax in that one place. So because of that, the states have been trying so hard to recover the revenue that they're losing from people who are selling remotely. So there have obviously been a lot of changes to economic laws, through the Wayfair ruling, but there's also been a lot of changes that have occurred to physical laws that I want to talk to you guys about today. But, just understanding kind of the why behind it, I think is at least helpful. It doesn't make any of it less painful, but it is helpful to sort of understand. So, other things that are impacting these changes are just all of the different growth factors that are existing today. A lot of companies are expanding where they sell, how they sell. Lots of mergers and acquisitions are occurring, which are growing people's Nexus footprints. So there's a lot of things that happen today that were not maybe happening 10 to 20 years ago that have really changed how sales tax has to be looked at. And so I like to typically start the Nexus conversation by kind of covering the physical aspect of Nexus. I work with customers every single day, and where I always start the conversation when it comes to Avalara is talking about where do you have Nexus. Historically, Nexus is just where your obligation to collect sales tax was only where your company was physically located. So if you are in Pennsylvania and you are only in Pennsylvania in terms of where your office is, that was where you were registered. It didn't matter where you were selling. That is no longer the case. So the Wayfair ruling is something that a lot of people call me and, want to say, I need to get registered in these states. I think I'm meeting these economic thresholds. But I always want to back up before we talk about economic Nexus and talk about the physical changes. A few of these things I see most commonly trip businesses up. And so I really want to focus on these, but be sure to read through all these examples of things that can trigger physical Nexus. The biggest thing I see get missed by companies is trade show attendance. So if you are selling, maybe in just a few states, but you go to trade shows all over the country, it's really important to understand that trade show attendance is a Nexus trigger. It does not matter if you are selling into that state or if you are selling at that trade show. If you are physically going to a trade show and advertising for your business in another state, that state determines that that is a physical Nexus trigger. The thought process behind that by the state is that if you are in their state advertising to, in theory, people that are living in their state, that you are attempting to generate business and that is going to be a physical trigger. This is something, like I said, I really, really see a lot of businesses get tripped up on. It's really important to understand if any of these physical triggers are affecting you, before evaluating economic triggers. Another really big one is remote employees. So remote employees meaning you've got people working from home in other states. Maybe you have employees that are traveling on site to visit with customers or to do installations or trainings. That's probably the second thing that I see, businesses be shocked when they hear that can be a physical nexus trigger. So in terms of being registered, where you need to be registered, it is really important to understand all of the physical impacts that can be had on your Nexus footprint. So again, this is something that, as you read through this list, feel free to shoot questions through the chat or shoot me an email if you'd like to talk more about some of this stuff. But it is really important to make note of where you guys may have physical nexus. Now, economic nexus. So economic nexus is what was basically brought forward by the South Dakota versus Wayfair ruling. The South Dakota versus Wayfair ruling happened in June of 2018. After June of 2018, there were about 7 states that rolled out economic laws as soon as July, so July of 2018. Since July, all of the states have started to roll those thresholds out slowly over the last 2 years. At this point, there's only 2 states that have not yet set thresholds. So this is in effect in the majority of the United States. Economic nexus really just means that if you have no physical nexus whatsoever, so meaning you don't have a physical location or you're not meeting any of the criteria on the previous slide, that if you are selling into a state and in an excess of what that particular state deems as economic presence, you can also trigger an obligation to collect and remit sales tax in that way. So every single state has their own definition of what their economic nexus is. So of course, just like with everything sales tax related, they did not make this simple. So it is something that has to sort of be evaluated state by state. A common sort of example among a larger group of the states is that they look at if you are selling over $100,000 or over 200 transactions into a state. So you can kind of see where the goal of that transaction and dollar threshold is to both impact companies that maybe are selling low volume, high dollar items, as well as high volume, low dollar items. So it's certainly not discriminating in terms of the businesses that it can impact. So, some of the common triggers I see when I'm dealing with customers day to day that kind of warrant a conversation around, are we registered in the right place? I have people say, we've had a change in ownership. I think that we're going to be required to have, a better process in place. So acquisitions, or changes of ownership can definitely have a big impact in that. Sometimes when companies are going through an upgrade of their systems, they might decide that it's the right time to also, reevaluate the tax solution that they're looking at. And so when they're doing that, it's very, very important to make sure that before you're implementing a tax solution, that you're actually registered in the right places. And so this is a common time that these conversations are coming up. E-commerce growth is a really, really huge one. If you've been typically selling, common scenario in the Sage world is that you've got businesses that are historically selling B2B, maybe processing all of their invoices through their Sage system. But now they're going to be launching a website shopping cart, and now they can be selling directly to consumer all over the country. That's going to really, really change where you may need to be registered for sales tax. Then another thing I'll note about e-commerce growth is that something I see with a lot of businesses is that they go through the process of, purchasing a shopping cart, having their website redone, and they're ready to launch before they ever call me to talk about this. And it's really important that if you are anticipating, a launch of an e-commerce system, that you're really, really sure of where you have obligation for sales tax and that you're registered in the right places, because you want to be sure that you're registered before you launch an e-commerce site so that you can be collecting sales tax on day one and make sure that you're in compliance when you start selling direct to consumer. So it's a really important piece when you are launching e-commerce. A lot of companies are expanding actually where they sell. That changes, the conversation. That changes where you're going to have to be registered. If you're growing locations, obviously there's growing pressure from states with the economic thresholds. A lot of customers I deal with, sometimes what happens is they have high-profile clients that get audited. And when those high-profile clients get audited, there's questions that arise for them about what their internal processes are. So that's another thing that triggers this conversation around Nexus and where are we registered and is it the right thing to be doing. So a big question that maybe some of you are thinking right now is, how does this impact me? Because I don't sell to end users. I don't deal with sales tax. This is a very big conversation I have day to day. The thing about the economic thresholds specifically is that they do not discriminate against B2B or B2C businesses. They are looking at gross sales into a state. So in order to be fully compliant, you do have to be registered in the states where you are meeting either those economic thresholds or have physical nexus. And even if you're not collecting sales tax, you have an obligation to be reporting into that state and collecting exemption certificates. So this is really the biggest piece for a lot of my Sage customers. You know, I've got people who 99% of their sales might be tax exempt, but they still have growing Nexus obligations, and they still have a lot that needs to be done in order to get them into compliance, and so that they feel confident when they go through an audit. So, you know, a couple of examples are listed here, and we can certainly share this information after the presentation so that you can read a little bit more about these case studies. But, you know, the first one is just talking about a manufacturer who was in New York. Their sales were made to other OEMs and reseller dealers. And so what happened is they had less than 75 certificates on file prior to the Wayfair ruling. After the Wayfair ruling, they then had to get registered in more states, and all of a sudden their certificates that they had to collect exceeded 1,000. So they went from managing 75 exemption documents, which may be perfectly manageable on on one person's own, but when you're managing more than 1,000, it gets very, very complex. You know, same thing with the second one, a national wholesaler that's relying on drop shipping grew their Nexus footprint exponentially. So though they were previously compliant with only 500 documents on file, they now need to manage more than 5,000 in order to remain compliant. So this is a really big piece of it. You know, as your Nexus footprint is growing, that you have to make sure that you've got your exemption documents in line prior to getting registered. So, you know, some of the challenges I see around exemption management, and I think this is important to address to kind of get into the deeper discussion of Nexus and, you know, where you should be getting registered and how to get to compliance. With exemption certificates, some of the common challenges I hear from customers when it comes to managing these documents is that, you know, first of all, collecting them can be such a pain. You know, asking customers to send you an exemption document, sometimes you're not talking to the right person. You might have someone sending you completely invalid documents. You've got people maybe shooting you an email with just their tax ID in it. It's difficult to actually collect them. You also are having employees maybe collecting them that are not really trained. They don't know anything about sales tax, so they don't even know if they're collecting the right thing. I know a lot of people I deal with have sales teams collecting these when they're actually, you know, maybe closing a deal. You know, I can tell you from experience as a salesperson, you know, I'm going to do whatever I can to close the deal. So I'm probably not going to be super concerned with the tax form that the customer is sending in. So you have to kind of think, you know, are the documents that you have on file, are they the right ones? Certificate retrieval is time consuming and hard. So if you are in a position where maybe you're registered in 5 states and you have to grow that to 15 states, it's going to be a lot of work and it'll take a lot of time to gather the documents that you need to cover those 15 states. So that's something that I hear, you know, is a sort of a deterrent for some customers in getting registered where they need to be registered. And so, you know, I recognize that that's hard for companies to sort of swallow. And then, you know, I've had customers personally that I've worked with that they've had a single missing document that has cost them exponentially in an audit. I had a customer I worked with a couple of years ago that was dealing with a high profile client. They didn't have the right exemption document on file for them, and they ended up paying about $150,000 in their customer's audit for having one wrong document on file. So it's a huge challenge, for especially in the stage world where there's a lot of manufacturers and distributors and resellers. And so it's definitely something that you want to think about in this whole discussion around compliance. The other thing to think about is the filing challenge. So, if you're growing from, again, 5 states to 15, 20 states, the filing is going to get a lot more difficult. Trying to consolidate that reporting at the end of the month or the end of the quarter, whenever it's time to file, having to go to all of the different state websites to, prepare and file these returns. It can take a lot of time, and it may take resources that you don't necessarily have. So, with the certificates and the returns, I think that this is something that, again, it deters people from maybe getting into compliance. And so I think it's important to recognize what these challenges are, because I know it's probably what's going on in the back of your mind. So at the end of the day, I want to talk to you sort of about how can you go through this process in a way that maybe is not so overwhelming. And so that you're, at the end of the day, not dealing with filing all of these returns. You're not dealing with having to collect 5,000 exemption certificates that you are not, maybe don't have the bandwidth to collect. So to kind of, wrap this conversation up about what you want to do to actually get into compliance, the first step I go through with most customers is a Nexus study. The Nexus study process is a questionnaire that you would have online access to if you go through this process. Through that online questionnaire, you will go through and answer very specific questions about the business activities that are happening in every single state. So when you go through these questions, you're going to answer questions about physical presence as well as economic presence. So what our Nexus study does is it fully evaluates where you have an obligation to collect sales tax and why you have that obligation. The why is super, super important in this discussion, because the why gives you some insight into maybe what that time period is that you've actually had the obligation. The reason that that's important is because you need to have a starting point to go through this process. So when you receive your Nexus study results back, what you get is a report showing you these are the states you have Nexus in, and this is the reason why. Essentially what it's labeling is going to be physical or economic. If it's physical Nexus, sometimes that can go back 5 to 10 years. If it's economic Nexus, you know that maybe the max that's going to go back is going to be 2 years, because that's how long the economic thresholds have actually been in place. So it gives you a starting point to figure out how to get into compliance. After the Nexus study has been completed, the next step sort of varies depending on the business. So for some companies, that might be doing a tax exposure analysis. So typically where people will need a tax exposure analysis is if you're in a situation where you have been selling a lot of products that would have been taxable. So if you're selling directly to consumers, for example, if you are in a situation like that, you would do a tax exposure analysis so that we can help you determine how much potential tax liability you have in the states that were uncovered in the Nexus study. So this is really important because it helps you figure out, worst case scenario, what are you looking at maybe owing to get into these states and to actually get into compliance. So it will take into account not only the back tax, but it will also take into account, worst case scenario penalties and interest. Penalties can range anywhere from 20 to 50% depending on the state. So it's really important to have an idea of what are you looking at having to pay to actually get into compliance. The good news here, and this is where I tell customers you not to get overwhelmed, because this is what we work with customers on every single day, is going through the step-by-step process. When the tax exposure is completed, if you are in a situation where you have a lot of liability, that is where you have options. You have options on getting registered in the state. If you're in a situation where you don't have any liability or maybe very little, you can go ahead and get registered in that state and start, working on getting into compliance from collecting sales tax, collecting your exemption documents, etc. If you're in a situation where you have a lot of liability, you have options through the state's amnesty programs. So states offer programs that if you go through them, and so there are third parties, Avalara is a third party that does these services. There are other third parties out there as well that do voluntary compliance services. So basically it's where you're outsourcing that registration. Essentially, you're going into the state anonymously and being guaranteed penalty and interest abatement. In some cases, there's also a limited look back on the tax that's due as well. So there are programs essentially in a nutshell, and we can talk more about these. This is where I really, really encourage you. If anything I've said today is sort of, raising a red flag to you, it's really important that you have a one-on-one conversation with us so that we can kind of talk about your business specifically and what to kind of expect through this process. But what those amnesty programs ultimately do is keep you from having to pay everything that's due to get to a point of compliance. So it makes this whole process a lot cheaper. Outside of that, so that's sort of addressing customers that are dealing with actual tax liability. If you go through the Nexus study and you're a company that maybe, like I mentioned, you're a company that 99% of your sales are exempt from sales tax because you're selling to resellers or you're selling to manufacturers. If that's the case, you're likely not going to have any actual tax exposure. But what you are going to want to do is still have an understanding of what states you have Nexus in so that before going through the process of getting registered, you can make sure you have your exemption documents in line. And so, kind of going back to talking about the challenges of that, that is where our software comes into play. And so, this conversation specifically is really just to talk about Nexus, but I do also want to ease some of your minds because I know that when I have these conversations, I've had people completely go into panic mode. And so it's really important to understand that if you do go from 5 states to 20 states, there is a solution that Avalara offers to help you manage all of this so that you're not going to have to deal with it. We have a tool that helps you automate the collection of your exemption documents and management of the documents. We have a tool that helps automate the tax calculation as well. So when you're actually processing invoices in Sage, we can provide real-time tax calculations so that you're not having to manage tax schedules in 20 states. And then we also have a tool that actually will manage the filing for you. So, I really just want to kind of touch on that so that you're not like, well, I don't want to get registered in 25 states and I don't have any way to manage that. Our tool has a way to manage that. But, the groundwork in this whole process is really to understand where you actually have Nexus, because the longer you sort of ignore that piece, the bigger the exposure gets. And so the Nexus study is something that Avalara offers. And, if anyone is interested in going through that process, I would love to talk one-on-one with you guys about that. And so, with that, I kind of want to open it up to any questions that may have been, Danica. I'm not sure if any have been coming in through this.
Let me see if there's any in the chat right now. I do have one. Is RKL still offering Nexus studies to its clients? At this time, as a result of the challenges from the pandemic, RKL is unable to offer new contracts for Nexus studies, but we recognize the need among our customers to maintain tax compliancy and have partnered with Avalara and along with some special price incentives for our existing clients. Alex, did you want to talk about the price incentives?
Yeah, so the Nexus study process is a questionnaire, like I mentioned, and typically what that looks at is the entire United States. The cost to do that process is typically $4,500. And so that is a one-time fee that will give you a report that shows you where you have obligation. It also shows you why you have obligation. And then the other thing it will look at 12 months of exposure. So where you see this tax exposure analysis on this slide, there is a small tax exposure analysis included in the Nexus study that can be really beneficial for maybe companies that just have economic Nexus, because it will sort of evaluate within that one process where you have obligation and how much you're looking at potentially having to pay so that you can kind of move on to the next step from there. So typically that is $4,500. Right now, in the month of April, we are offering RKL customers 50% off of that service. So it will be $2,225 one-time fee to have that Nexus study completed. And I really want to emphasize, too, the Nexus study does not get you into some sort of long-term process with us. It really is just the groundwork in this. I've definitely had customers purchase Nexus studies in the past that maybe they just want that information so they kind of know what they're looking at. But instead of ignoring it, they wanted to at least have the information. And so, you know, not everyone moves on to purchasing software. Some people figure out manual ways to deal with it, but the Nexus study is still the groundwork and sort of understanding how you can actually get into compliance and make sure you're registered in the right places. So again, in April, we will be offering 50% off Nexus studies to RKL customers.
Are we able to share a sample of the Nexus study?
Oh, yes. Yeah, sorry. Yeah, your account manager at RKL will be sending a follow-up that will have my information in it so that if anyone has questions, they can reach out to me. And it will also include an example Nexus study so that you can kind of see what the deliverable is once that process has been completed.
Okay.
Awesome. Thank you guys so much for your time today.
Thank you, Alex.
Yeah, please don't hesitate to reach out with any questions. I talk about this all day, every day. I sell Nexus studies almost daily these days. It's a very common thing for people who maybe are late on the Wayfair train. So certainly don't hesitate to reach out with any questions. Happy to help.
Thanks. This concludes our webinar.